All right, we'll let people roll in, and Ali, we're just going to start right away then. Again, thank you so much to Park Launch again for hosting this and giving us this amazing opportunity to talk to Yousuf Khan directly and ask him questions. This is an AMA, ask me anything. So aside from your favorite color type questions, everything is kind of fair game. But given his amazing experience, I think there's a wealth of information to be learned about startups, fundraising, hiring, all sorts of things. Real quickly, I'm Ahmed Malik. My background is in finance, but then I jumped to e-commerce, launched a couple of brands on Kickstarter. We scaled them up. The company got acquired earlier last year, and now I've made my foray into tech with Cutlery, which is a software for improving productivity for managers and leaders. And very excited to welcome Yousuf Khan on board and this really interesting opportunity for everybody, I believe. So Yousuf is a general partner at Ridge Ventures, an early stage venture capital fund investing in experienced founders, redefining how the world interacts with software. And he's based here in the Bay Area. And some of the portfolio companies are Crux, Mindfield, Sappho, Minted, Braze, Third Love, Fastly. So it's a very wide selection, which is amazing. And he has served as the Chief Information Officer for various Bay Area tech companies, including Automation Anywhere, Moveworks, Pure Storage, and Qualys. He's been a runner-up for the CIO of the Year and an advisor to Zoom, which we're using here, Productiv, Material Security, and he's currently on the board as a board of director for Ridge-backed companies, including Archera, Cerby, Chisel Labs, Lightyear, Rafay, and Rewind. That's the best we could summarize it for Yousuf. And in case I've missed anything,
that was fine. Thank you very much. Let's get into it. Yeah.
All right, awesome. Let's get into it. Thank you so much again. And the big elephant in the room is the whole market recession or recession adjacent, whatever people want to call it. But specifically, do you have any thoughts on the implications of the current market for early stage fundraising? And specifically, like what types of startups do you see getting funded and what types that are not really getting funded?
Yeah. So, and thanks, Dolly, for setting up. Great to be back. I think there's a couple of things that are happening in the market. I think the first 6 months of this year, it was, very clear that it was very difficult for a number of startups. That was a reason for that is, of course, both in terms of markets, the change in interest rates that happened. And ultimately, venture had to basically go through a little bit of a reset. It had been, I would say, quite crazy valuation for a lot of companies, irrespective of what space they were. There was a ton of capital being deployed, and companies were being backed without a proper due diligence in some cases. In other cases, they were just chasing deals that were considered hot companies that were done with founders that with respect probably had difficulty being able to deal with adverse times, and unfortunately some of those have fallen prey to difficult times. So I think the first 6 months of this year, I would probably argue that was amongst the most difficult in the industry for quite a while. The second half has actually been a lot better, I would say, and it's continuing to get better. I continue to be very optimistic. So, to put that into context, we've probably seen more companies come into place for fundraising than we did before the first 6 months. We've definitively done more investments. We were successful in raising Fund 5, which is $180 million. A lot of funds also had difficulty raising. So that was also part of the reason. And the other aspect was there were a number of layoffs that are happening at quite sizable companies. And that, gives everyone room to pause, whether it's investment managers wanting to investing in tech, whether it's startup founders wanting to raise money or startup companies. But, eventually what's happened now is economies and industries are much more interconnected than before. And at the heart of that interconnection is both people and technology. And the reality is, especially what you've seen with a lot of the trends towards AI, that have come into kind of the mindset now. it definitely has become a little bit more interesting, and I think more optimistic. So, to be more direct, I actually think this is a great time to be able to look at doing fundraising for companies, because somewhere down the line, layoffs had to come to companies need to build again, right? After basically doing a bit of reset. Fund managers can't stay on the sideline. Their job is to be able to invest capital. And so whilst there is a lot of chaos after that storm, after that chaos has kind of settled down, you have to get back to work. And you have to basically be able to both write checks back companies, and companies need to grow and figure things out. We've seen examples where companies last year were really struggling, and turned around and becoming some of the fastest growing companies in our portfolio as a result of that. So what that gives me is a degree of optimism that ultimately the best founders are ones which don't let external forces affect their ability to both fundraise, get a product, get a company. And I've seen countless examples of that. I don't think people should be, I think people should take that, as founders specifically, should take what's happening in the market as a data point. But it shouldn't affect your day-to-day from that perspective. You still need to build a product that you got funding for or thinking of basically building. You still need to acquire customers and to be able to sell, right? You may have customers that are going to stop buying, but there are always going to be customers that are buying. So it's a very wide economy, and I think the best founders are the ones who can be able to figure that piece out. So I wouldn't let that be discouraging at all. And I don't do that just because my job is to be able to invest in companies. I honestly believe the best founders are able to basically figure out solutions to be able to keep their company stable, to be able to bring customers in place, to be able to grow revenues. And then, yes, if they need to delay their fundraising, so be it when their metrics are better, but they can still basically do so.
So thank you for that insight. And I think that should resonate with a lot of people where, now we're seeing examples of even just recently Convoy, right? Convoy just at such a later stage, even post what you can say product market fit. And, despite having, I don't know, hundreds of millions of dollars of GMV and maybe tens of millions in revenue, one fine day, they, after months and months of they just shut down, right? There's it's not unique to very early stage startups. The fundamentals that you just mentioned are definitely very important. So it's good to hear that again for, I'm sure, a lot of people. You touched on some of these things, but as a VC, what are your top, let's say, 2 to 3 reasons for investing in an early stage company? And on the flip side, the 2, 3 maybe that are reasons for not investing.
Right. At the very heart of it, at seed stage, even at pre-seed stage, I would argue probably at A stage as well, it really is an investment in this team, right? That's ultimately what it comes down to. Ultimately, an investor is asking, at least we're asking, is can this team hire? Can this team build a product? Can this team take a product to market? Can they sell, right? Can they raise money? And so ultimately, there have been no shortage of stories where a founding team has been able to look at a product, start a company along a particular journey, and then pivot. Pivots are fine. They're not necessarily bad things. I've seen plenty of companies pivot and do very, very well. That's totally fine to do. And so I think a big focus is really about the team, the background, what you've been able to put together. The second comes down to, let's assess the market. A large part of this is markets take time to absorb new changes, right? To be able to absorb new products. I was the first customer of Moveworks, was an enterprise AI company, really solving, using AI to solve IT support tickets. That was not a market, right? At that time, that was not a exciting use of AI, but for CIOs, it was very relevant. And then I became the first customer, and that was followed by a couple of others. And then we started to, educate the market when I joined the company about what the possibilities were. And people started to create value and be able to create budgets for those particular industries. So ultimately, it's being able to synthesize what's happening in a potential customer environment, how you build a product to solve a problem. And I think that's very important when it comes to B2B software is, are you solving a business problem?
Right.
And then being able to take it to the next level. Taking a company like Snowflake, there's been no shortage. Hundreds of companies have gone after being able to organize data and structure it and visualize it and pipe it in and put infrastructure around your data, etc. Snowflake is less than 10 years old, I think, and they came into a very competitive market, but they solved the need of being able to ingest data into a single platform with very little friction, and being able to allow companies to be able to actually not just visualize, but to be able to use it to make decisions. And now, whether it's an early stage startup using Snowflake versus Redshift, or it's a large enterprise or a trading company, they're doing that, right? And so I think when investors at this stage look to invest, which I think a majority of the people are looking to, they're really asking is, what is this team, and what can they do, and being able to assess the team and think about the market in terms of where you can go. There's a whole host of other factors, of course, but I think those are the two that come to mind.
Right. No, that's awesome. Thank you for sharing that. And we have some very interesting questions coming in from the audience. One that stands out is why did you decide to pursue VC, and how was your transition from the corporate roles to the VC world? Any challenges, please, lessons learned?
Good question. I get asked this quite often. Quite candidly speaking, I think I love being able to build companies. And if I can play a part in that by investing, being an active board member, being able to advise and coach founders where I basically can, that was something that was a motivation for me, and something that I was excited by. So I, advised companies in the past, companies like Zoom, for example. I was an early customer of Moveworks. I'd advised other companies like Mist Systems, who got acquired by Juniper Networks for about $500 million. Material Security ended up becoming a unicorn. Productiv is doing super well. These all started from conversations, other than Zoom, at the very early stages, when a company was barely formed, when the idea was just being able to put together. And to be able to see that product and that team come together and be able to have customers, raise sizable funding, grow in valuation, hire employees, etc. For me, that was the motivation. And so that's why I spend time in forums like this, being able to advise and help founders where I can. I used to do that for every weekend for the last 8 years. I'm clearly still doing it now. I'd spent 20 plus years in a number of corporations at the C level, with a number of companies. Eventually, it doesn't. It's a level of fulfillment you get. There's only so much fun you get out of rolling out Salesforce. In doing that over several years, you get better at it, but you probably don't want to continue doing it. And there's no judgment for people who do. People have built long, successful, fulfilling careers doing that. But I wanted to do something more, and part of that was being able to move in venture. So it's been great. I've absolutely zero regrets. I'm still having a tremendous amount of fun. It's exceptionally hard work. I've gone through everything called a bank run with SVB, to a bull market, to an absolutely potential recession, and then some. I've seen companies go crazy in valuation, some not grow, revenues, people change. It keeps you tested. But I think the combination of strategy, finance, technology, all of those kind of coalescing together, I think that was something which was always exciting to me to be able to discover.
Oh, that's awesome to hear. And VC is generally notoriously hard to break into. But I feel like the way you describe it, and if it gives you that level of fulfillment, that's phenomenal, especially because you're bringing in that amazing knowledge and experience of not just large corporate, but also growing startups, for Moveworks and many other examples, I'm sure, which is very valuable, I would say. And from my perspective, at least, not all that very common to see that level of experience, and then coming into very early stages, into the trenches, and later stage also. So that's amazing to hear. And again, a question we get a lot is, the next one I'll move on to is, are you looking at the Pakistani market for any investment?
So I'm an LP in a couple of funds already. Of course, a big part of Pak launch I was at the Dubai conference earlier this year. I wasn't able to make it to London, hopefully to make it Riyadh next year. So continuing to talk to a lot of Pakistani founders, a number of different companies. We haven't made an investment yet. We can invest outside of the US. We've made our first investment in Europe. We're looking at a second investment now. I'm talking to companies all over. The reality is we invest at the seed and Series A stage. So I continue to be excited. And I believe that markets grow over time, right? And so I just believe the country has huge potential despite, no shortage of problems structurally, economically, and infrastructure-wise. But ultimately, there will be a unicorn or two that will basically come out of that space and that sector in that country. And I hope to be an investor. So not just yet, but optimistic and active.
Awesome. That's great. And you're already an LP, so you're voting with the dollars as well.
Yeah.
And just maybe a little bit specific, any specific sectors or industries that you find interesting or promising?
For us, it's B2B software, right? I think they're in a market like Pakistan where there is a huge, the market is not big enough for just B2B software. That's why you see a lot of companies in, consumer or being able to look at fintech or others. Mainly because there's no shortage of problems that can be solved by technology, and that's great. My focus is B2B software, and so we're very specifically focused along those lines. We've seen quite a few companies that we were excited about, but weren't able to sort of get there for investment purposes. But B2B software is something that I think is absolutely ground level. And the theory behind that is more businesses are going to be buying more software than ever before. At the very least, they're buying productivity suites like Microsoft Office and Google. They are buying collaboration products, whether it's because of a pandemic or otherwise, using companies like Zoom. But ultimately, in their processes, to be able to make the lives easier, both of their customers as well as their employees, as well as being able to bring operational efficiency, technology is going to be at the center of that. So I continue to be excited about the B2B software.
And that's I just want to double click on some of the things you mentioned, the productivity and efficiency, for example. At least something personally I'm interested in a lot is, have you seen any changes in that? Of course, layoffs are a massive part of, in some way, maybe increasing efficiency, I guess. I mean, you could argue, or have you seen major ways in which startups or even larger companies are behavior changes they're adopting to kind of get more productive or efficient, depending on their goals?
Honestly, I think it's still early days. I think part of the challenge is that there's a lot being said about AI, and there's a lot of products that will come out of this kind of new technology shift. The question is whether they will be good businesses and investable businesses. There'll be no shortage of products. You can use anything for no shortage of solutions, whether it's for note summarization on meetings or transcription for customer service calls, being able to radically create PowerPoint slides based on an idea. All of these things are fantastic. Whether they end up being large investable businesses is something that is still very early days, and so that will sort of take time. Productivity continues to be a challenge for companies, but I don't think that, I'll be honest with you, it probably isn't the biggest investment focus area, because there are no shortage of problems, and a large part of it is really being able to drive productivity in an activity which will help gain revenue or retain customers, and that's going to be the core focus of those solutions.
That makes sense. And this is interesting. So can you share any memorable success stories for investments that got you exceptional returns? And I would personally add even the ones maybe that didn't. That's something we don't talk about a lot.
Yeah.
That also.
Braze is a good example. When that company was first founded, it was called App Boy. It was kind of doing next generation customer engagement, both marketing and experience. And understood the ability to be able to engage with customers through multitude of experiences. And when we invested, it was worth double-digit millions in valuation, and when it exited the public markets, it was worth 7 billion on the market. So that was a several 100x return for us as an investor, albeit over 10 years. But venture is companies are built over time. We were early investors in Crux. We sold that to Salesforce for about $1 billion. We're absolutely early investors. We're early investors in Fastly, which has went on to become a public company. I myself have been a founding advisor to companies like Mist Systems, which got sold to Juniper Networks for about $500 million. And I've been advisor to a number of other companies. So in venture, it's not about the companies that go down, it's the companies that you miss investing in. And so I'm not saying I've got a perfect track record by any measure, but I've only been in venture for 3 years. And so a lot of, it'll still take time for the companies that I chose not to invest in 3 years ago for them to prove me wrong, which I'm sure, very, very sure they will. And so that's definitely one of the, no shortage of examples there.
All right. And can you share any tips or advice for aspiring entrepreneurs who are just starting their own ventures right now?
Very broad question.
Very broad question.
Let's go into one where you say approaching building a strong team and culture. Let's focus on team. Like I said, I think one of the major things is at this stage of investing, it's a really big bet on the team. So whatever you do, finding the right co-founder is, that's the hardest from my standpoint. If you want to be a solo founder, that's also fine. But then you've got to go dive deep in and know that you've effectively will be judged on a number of different areas. I think a key success is being able to find the right team to be able to build something alongside with. And that takes time. You've got to basically figure out how you make decisions. You've got to agree that this is a long-term journey. You've got to figure out each of what are you in it for? What are your incentives? You've got to kind of sometimes agree on the problem, to be honest. Sometimes it's very familial and just a friendly founding team. We just invested with a group of founders who worked together for 10 years. Sometimes it's the formation of a team. They've got to know each other over the course of a year. They've agreed on the problem. They know what roles they basically play, and they'd be able to basically do that. So one thing I'd advise, aspiring founders is make sure that you have a good team to basically start with, and think about that's the team that you want to win with, and you're totally fine if it doesn't work out, that's the team that you don't have regrets. Probably spend most time on that than anything else.
Makes sense. I think that's a very good insight into kind of probably goes hand in hand, not just very early stage, but it comes to play even in later stage if you don't have a strong foundation in the problem, especially the team, because there's not much else. Somebody just asked a question about this DCF, discount cash flow projections, and discount rate for frontier markets like Pakistan. I would say that's such an early stage. I mean, I'm taking the liberty to answer the question here, and I'll let you do that, where DCF, cash flows, and discount rates don't really come into play that much in very, very early stage, because as you just mentioned, the team is product is such an important part. But I will, kind of let you answer that in terms of, I'm just thinking of generally maybe cash flow projections, how important are they? And the question is specifically about discount rate, which I'll let you handle.
Yeah. No, so you're absolutely right. DCF and those traditional financial modeling doesn't work at this stage. You don't have the data points. Everything's on assumptions. And so anyone who goes down that road, I would strongly advise against it, number one. Second is cash flow projections, all of those things. Again, those are going to be subject to change and then some. The only way you're able to basically put those down on paper is being able to either run a hypothetical model, which basically says, these are the customers, size of customers. You have to be very specific about the customer that you are targeting, how many of them they are, how much they'd be willing to pay, and be able to do that. The only way cash flow comes into place is if you have design customers. Now, most people make this mistake. They're like, well, I'm going to go get funding and then go chase the customers. You've got to do a multitude of things. You've got to go and find people who align with your problem, and that will demonstrate your ability to sell, which is what an investor will look for, as well as how you basically build a company. So some people, and there are a lot of people who would be happy to be a design partner in a new next generation innovation because they want to be attached to that. They will get a good price for it and all the other things. So if you're a B2B founder, you should definitively making sure that you have a very good first set of design customers. And it doesn't matter how much they're willing to pay. They have to say, we can be a good test bed, we can be a good design partner to be able to do that. And that will therefore help you determine what potential cash flow could look like when you look to have referenceable, established customers that are basically put into place.
Right. No, I thought I'd still ask because it's somehow, at least I've experienced this over time, where people do, if they're coming from a traditional industry, they do tend to heavily emphasize on cash flow. And as personally somebody who worked in M&A and this discount cash flow was my bread and butter for many years, it's hard for even me to explain that this isn't that relevant, right? It's all the other things that are more important. But I'm glad you address that, and I think people are very likely to trust you very highly on that. So appreciate that. So another question is, so what are some of the most common challenges or pain points that you've observed in early stage startups in your portfolio, I guess, and how do you help founders overcome them?
Challenges. Other than team formation, is being able to figure out how you take a product to market. So one of the things that I'm able to do, because if it's a B2B space, I've been buying software as a buyer for 20 plus years. And so I provide that vantage point in being able to assess whether somebody would buy that product. Can I do that from a consumer standpoint? Sure, but you need many more data points to that. It's just too much variability for that piece. Sustainability, most likely, but you need to educate the market. I think there was a question attached around there. So being able to take a product market is one way that I tend to basically be able to help. The third is really being able to think about, hiring and how you build out a wider team, what the gaps are. And then the fourth is, how do you grow as a company, and how are we able to then basically go to the next stage in being able to do that. And that may mean, hey, it may mean you need to, go up market in terms of customers. It may mean you need to, have a very specific motion, whether it's being able to do more field marketing, or you're missing a product marketing gap, for example. It may well be thinking about just core business operations in terms of scale or security or engineering. It may be thinking about long-term product strategy. There's no shortage of work that needs to get done. One thing I'd give to founders, there's going to be no shortage of work for all of you, right? And so what's important is understand that you're always going to be busy until you've built a company that is stable and you've got people that are running it. So you've got to be judicious with your time to be able to where you need to basically focus. And sometimes you've got to get people in place to be able to help you do that.
Yeah, that's awesome. I jump back to an earlier question on, I think you already addressed some of this, but maybe you can be more specific on how do you typically approach mentoring relationship with startup founders?
That's easy. You just connect with me on LinkedIn. So I'm happy to, I typically tend to give advice sometimes over Zoom. A lot of times I will do so over email. I'll give tons of feedback, looking at a pitch deck or otherwise. So I've been doing that over time. For founders that I invest in, it's usually the busiest for the first 6 months to a year where you're spending that. And then, the hope is that the company's grown and developed, and therefore next thing you know, you just show up at board meetings. But you tend to basically have a monthly meeting that you typically have with investable founders. So it's something I'm happy to do. And my schedule does get busy, but I've been making time for this for the last 8 years, and I'm more than happy to basically do that.
No, thank you. And then so for people, LinkedIn is the best way to reach out to Yousuf. And then I would always say, kind of be mindful. I'm sure you get a lot of inbound, so and just be mindful of his schedule as well. And okay, so there's a question which I'm not sure. I want to give people a fair chance, so we'll bring it up. But let's see, is it true that VCs prefer B2Cs rather than B2Bs?
That's not true. No,
It
used to be the case. Look, every fund, just to give some guidance, every technology is taking over the world, and as a result of that, there are VCs that are looking at each of these areas as their investment strategy. So no, consumer is definitely one space. Maybe specifically for Pakistan, quite possibly. Yep. I can understand that, right? Growing populace, I can totally understand where that sort of comes into place. So in certain markets, no question. For example, fintech definitively has been huge in the US, and it's structurally and economically really well placed for Europe in terms of the ecosystem, the technology, and the regulations in place. So it makes common sense to be able to think about how that works. But in the US, it's a wide place. In Pakistan, I think you could be more generalist, and I think consumer is part of that. So yeah, that's what I would say. But there's no strong preference. Every fund focuses on a specific area, and that's totally fine as an investment strategy.
Makes sense. Yeah, no, I think in Pakistan, I wasn't sure about the context, but in US, definitely B2B is more prevalent, and B2C, I mean, I was very different in consumer. That's even way suppressed and on a smaller scale. And people have asked about connecting with you, about sending seed and a decks and everything. So again, LinkedIn is the way to go.
Sure.
This is an interesting one. In your past experience, what were the best strategies for lead gen and growth for companies that scaled well, given post-product market fit?
Yeah, so lead gen and growth, I would strongly advise, and there's another related question around sales operations function as well. So let me suggest answering both of those. So specifically on lead gen and growth, look, the number, don't overthink it. It's probably my one advice. Like, a lot of people overcomplicate this. The reality is there's specific platforms that your buyers are looking at to be able to get educated about the market. In enterprise software, it's going to be Gartner, and you're going to have to spend time, speaking with Gartner analysts, understand what the buying patterns look like, and be able to basically do that. For consumer and fintech, it's going to be different. And I honestly think it's very important to get your digital SEO, PPC kind of strategy absolutely right. It is important that people overthink it by being able to be like, oh, we need to be super targeted, we're not getting numbers. Remember, the objective is not just to be able to get clicks and to be able to educate the market, but you also need to be able to figure out what's working, right? What sort of messaging is working really, really well or not. In B2B, a large problem, if you're enterprise, it's really difficult to basically do product-led growth where you're only selling into, developers or, engineering managers only, and for them to swipe a credit card. Of course, AWS, phenomenal, but they also had to become an enterprise company to be able to really engage with customers. Atlassian, the same thing. All of that takes time. You have got to spend time doing this experimentation. I mean, you've actually got to say what doesn't work. The reason for that is not just for your team to focus, but that makes a better story from an investor standpoint. When you go out and raise an amount of money, you're able to say, we know how to take this product to market. The reason that we need this investment is to be able to double down in one or two of these core areas to be able to take it to the next level. So that's what I would advise on PPC and demand gen. The other piece is, of course, the number of AI tools that are available to you. Those you should be using because they are able to accelerate that in some way, shape, form. Pick one, it doesn't have to be perfect, and then go out there to be able to execute. On sales operations, it's an area I've spent a lot of time in over the course of the last couple of years. Here are the key things to focus on. Number one is make sure you have a rigorous sales process. It doesn't have to be perfect. Again, it will iterate and change as you develop new products, as you go to market, but you cannot run a business on exception. And so what I would strongly advise founders is, especially when you think about sales operations, one is to be able to define the sales process, even if it's in its infancy. Second is to be able to make sure that you don't overcomplicate your systems. Typically what that means is, and I'm being very tactical here, as you can see, I'm a nerd, you do not want to basically create too many custom fields in your CRM, specifically Salesforce and the opportunity object, or even HubSpot. What that basically becomes complicated over time is reporting. You should not be using custom fields as a way to figure out how you report. That's what BI solutions are there for, and become much more intelligent for you to be able to do. The other aspect is being able to actually have discipline in how you think about forecasting and definitions. So in sales operations, one of the things that becomes problematic is at the early stages, your entire market is a territory. right? But start to basically at least define where people are going to be able to focus and how you hire from. The second is be clear about what the stages and what the forecasting actually looks like. A forecasting call is not to be able to show everyone's homework and get a grade report. It's really about basically the best forecasting calls are the ones which are able to talk about what actions are required and what support is required to be able to do that, and then what the commit is for you to be able to build that out. It sounds basic, but people, like, I've just seen this done really badly, and it's something that I'm passionate about, being able to help B2B companies. So I think it's very, very, very important to be able to do that.
So I would stress for everybody who's listening, I will probably play this recording again for myself, because what I can guarantee you is there's a lot of gems, and some of the things that you just said, Yousuf, you made it sound simple, but it just like you highlighted it may seem obvious or simple to you, but often as a founder in this seat, it's often, you're maybe bogged down by details or you haven't thought through it. Coming from you and your experience, I would absolutely encourage every single founder to, Ali, I'm sure this will be made available later, to kind of re-listen to some of all of this, and specifically what was said in the past few minutes.
Appreciate that. Thank you.
Taking notes on that, because I'm in that seat now. Again, I've done similar things before.
Happy to talk. Yeah.
And so that is still valid here. So definitely make use of these kind of solid nuggets. And while we're still on the subject, I would thought it would help. Nobody's asked this yet, but when product market fit itself is often an elusive term. I'd love to hear your perspective on what you consider to be product market fit.
The most operative word for that is the market fit, right? So the market fit basically defines what part of your product is working. No shortage of examples where the revenue for a company has 90% has come from one product, okay? Both in consumer and in enterprise, okay? I'll give you an example. Lululemon, right? Phenomenal brand in leisure wear. 40% of that revenue comes from only one product. 40%.
Yep.
In B2B software, there's no shortage of companies where it's between 80 and 90%, which is a core product. Does that discourage you from building other products? No. But what does it mean for either how you're selling, how you're positioning? And I think that's product market fit is a journey, to be honest with you. Ultimately, people move on pretty quickly if you've got the core of good product market fit is making your customers wildly successful. Like they don't, and second is, how do you become an obvious choice? If you are a startup or you're an enterprise and you're looking at an identity solution, Okta is an obvious choice. For collaboration, Zoom is an obvious choice. You don't think twice about that, right? So that's what great product market fit looks like. Doesn't have to be super exciting and transformational. Like lots of great businesses have been built on being the obvious and sometimes boring obvious choice. I love those businesses. Sounds great to me. Lightyear is a company I'm on the board of. We led the Series A for them. They solved a very core problem, which is manual email, phone-based approach to buying B2B telecom software. That's circuits. If you're a retailer or you're a corporate office and you want to buy a telecom circuit for internet or phone. Boring problem. Can be solved by technology, 100%. So they've been able to do that. And a fantastic business with 300 customers. I think they've got great product market fit. Do they need to evolve their product? Yeah, they're going to do that. But product market fit comes on the back of your customers being wildly successful, you being able to educate the market for them to align, and then third, being able to make sure that the improvements you're making to the core product continue to add value.
Awesome. That's again, I would say, guys, rewind and listen again. And specifically, you did mention that, of course, the team is very important, but maybe going a little bit deeper. The question is, how do you assess the strengths and and the real potential of founding teams?
When you come to an investor, being able to demonstrate and talk about what you are great at is very important. 99% of founders don't do that. You have to be able to do that. You also need to say where you have gaps. It's totally fine. And the reason people should do that is because people aren't crazy and don't know what they're talking about. They will be able to assess that themselves. It's better for you to be able to actually own the narrative around that. So I think a lot of founders don't do that. Assessment of founding teams requires diligence on being able to have multiple conversations with them and to be able to understand what their motivations are, how they think about decisions, how they think about the market, how they look to hire, how they manage, how they fire, for example. And the second is really about diligence, right? So if you're a B2B founder building a company and you're going out, or if you're any founder, B2C or otherwise, like, remember, at this stage of investing, it's a large part of the team. So in Pakistan, where there is, the market still needs a lot of development for both the tools and kind of the ways to be able to diligence a company and a deal. There's a question about state of incorporation, which we'll come down to. Try and provide as much information as you can that will help an investor make a decision, right? It's better to be able to lean in, to be able to demonstrate how well, it's also a signal about how well organized you are, right? I mean, these are the small things that make a difference. And I think it's very important to be able to basically do that. A lot of people just don't. So yeah, diligence from an investor standpoint continues on a pretty rapid basis. And that requires you to be able to understand what their track record is, what they're really good at, what they've done well, what has been a highlight of their career. Sometimes it's academic, sometimes it's not. Sometimes there's a stable of people who are coming out of, GISK or LUMS or IBA or others, basically, right? That's, so all of those things come into place. And again, I'll go back, it really is about the chemistry within the team as well. Like, you can tell when a team is high performing or well functioning. It's easy for a lot of investors because you can clearly see that, if you were able to give them an offer, they'd probably take a long time to make a decision because it's a signal about the lack of dysfunction in the team, right? What roles they play, what the chemistry is between them. These things are very, very important.
Oh, thank you. Switching gears a little bit, how do you stay informed about emerging technologies, market trends, industry developments?
I'm a complete nerd. You're asking the wrong person. I read far too much. One thing I will say to you is, if you are deeply passionate about something, success will follow. And I would advise those people, remember, if you are building a company, you have to have rigorous focus. Like, you've got to live, breathe, and sleep it. Like, you've got to know this thing inside and out. When you have investor conversations, when you have customer conversations, it can't just be an idea. It has to be more than that. You have to be able to talk about what's really hard about this problem to solve it. What is hard about building a product in this area that's solving it, whether it's using AI or it's using automation or using some other solution that you're building. Talk about the problem and how you came to the genesis of actually understanding how to solve it, right? What is your motivation? These things, if you don't articulate them and you don't do the research, you have to do the homework. Like, we've learned that as kids. And so I'm constantly just reading a lot, being able to talk to people in different spaces, being able to speak to founders. And so I do that as discipline. So that's me. Some people will do it differently. Hey, I ask ChatGPT all the time. But they're a great friend. Accurate information is clearly not accurate, but that actually forces me to be able to basically find out and verify it. But it is actually quite transformational what OpenAI has built.
Right, and I think given how VC's job is often to very quickly understand a certain industry. And it's not just that, it's like, okay, now I understand this particular space, not only enough currently, but also what's going to be the future of this, right? So that's a very fine balance to make. And then not just for the sake of understanding, the next question is, if and how much money are we going to push behind this idea, right? So that's it's phenomenal that you're able to do that. I have a lot of respect for that entire process, and then to be able to do it successfully with regret minimization. I guess what you laid out is, I'm sure, really, really strong way to build those foundations. And you've touched a little bit about that, I think, but I'll still ask away is, as an investor in your first meeting, what do you want the startup to share with you apart from the pitch deck?
Most people do not practice the pitch. Amazing. So if you're a first-time founder, like, you have to be able to practice this pitch. Okay. And it's I think that's important. So just practice out. It doesn't have to be overly scripted. Just, every investor is different. You don't know them, you're meeting them for the first time, etc. But the motion is not very complex. Hi, hello, this is what I'm about. Would you like me to go through the deck? Yes, go through the deck. Right? Like, that's 80% of it. Let them interrupt with questions, go through that, but you have to practice the pitch, right? It's very important. Communication skills in this space are very, very, very critical. Put yourself in the shoes of the investor. This is part of the reason that I basically did doing sessions like this, is like, these are the questions that are investors' mind. I'm one of hundreds of VCs who look at companies, and they're asking the same questions. How do you build this product? What's really hard about this? Why are you building this company? Where does your team come from? Who is the target customer? How do you identify the market? Who are your first few customers? Right? Like, what makes this so special? How do you have competitive advantage? So, like, in the first pitch, like, sometimes in the second pitch, you've got 30 minutes, sometimes 20 minutes, depending on the investor, and you need to be able to define and put that in place. And then, do some of that in the deck as well. You're going to get more no's than yeses, but you're only looking for a few yeses. So that's kind of important.
No, that's I think it's solid advice. Counterintuitive though, that a lot of people with the pitch isn't necessarily, they're not prepared for it, or they haven't practiced it enough. It's interesting to hear that from that. You may have seen that so many times that that's the number one thing you bring up. And somebody's asked about ARR. I'm not sure if it's true for you or not, but it's like, why do VCs ask questions related to ARR when they're doing pre-seed investments?
Right. So the reason they're doing that is they're not aware of the market, right? They just literally don't know the market. It's going to be an obvious question. So think about the investment process. We meet with 500 companies. We're going to say no to 90% of them. That's just the way venture works. You have to look at a ton of companies to figure out which of their 5 or 10 a year, in our case, or 20 a year, depending on the fund size, what they're going to go in. And part of that is the metrics that go into place. Some depend on ARR, some don't. Some invest in the team. So there are no shortage of investors who invest in pre-seed. There's no product, there's no revenue, there's no customers, and that's totally fine. That's their job. But for that, they are taking a huge risk, and therefore they should basically take the equity that they're asking for. The ones who ask for ARR are probably, candidly speaking, probably haven't read the deck. In some cases, that's possible. There's a lot of information that they're basically putting in place. I'm not trying to apologize for them, but they're looking at 10 companies, a week, a day. Sometimes you have to put that in place. At least be able to talk about what a revenue strategy looks like if you're pre-revenue. And if you're seed. Part of that, by the way, is the question is also about being able to understand that you understand how a business works. So you being able to talk about the margins for this business are this, shows that you can run a business even with the small customers as a balance sheet. You know what I mean? So a lot of founders actually should spend time actually understanding how a business works. It's not like, oh, I just get this capital, I get these customers. Like, what actually takes this business so you don't run out of money, you can predict what your next fundraise looks like. Those are the best conversations to have. I genuinely think that a lot of founders fail at the first hurdle because they're not able to articulate clearly, be able to do it with a degree of passion and excitement about what they're building, and being able to demonstrate their understanding of the business.
Right. Let me just double click on something where you mentioned that they may not be familiar, let's say, with the market, right? And you as a founder go in, you're sold, let's say you have the best answers. But in that particular case, if they're not very familiar, what could a founder do to, in very quickly, maybe in a single conversation, to make it not more familiar, but more relatable or
be prepared for follow-ups, right? Most founders make this mistake. Why would you not have a good first meeting with somebody and be, look, every meeting's different. But for example, if you meet with an investor who doesn't get you a market, how do you educate them? And you can't do it in 30 minutes. Well, you either ask for a follow-up or send them something on email. Hey, by the way, I know you were asking the questions about the market. I'm not sure I answered the questions very well. Here are the 2 things you should look at. Here are some other companies that have been operating in the space and how much money they were able to basically raise. Like, why would you not keep a level of communication with a potential investing source versus cutting it off, right? So you have to, it's so important to reiterate, when you are a founder, you have to do everything possible to be able to take your company to the next level, right? And if you're going to operate towards a very specific playbook, which a lot of founders make a mistake, they're like, pitch deck, idea, team, like that's not how successful companies are built. They are built in competitive industries. They go to market. They are not shy of competing with their competitors. They will happily talk to as many investors that they can get in front of. They will reiterate their pitch deck. They will speak to their customers. They will do whatever they can. Think about just look at the companies that I worked for. They were not like, they were in competitive. Pure Storage was not the first company in the storage space. It's a deeply competitive space with large competitors like EMC and NetApp, multi-billion-dollar revenue companies. Why did Pure Storage, who was founded in 2009 at the height of financial crisis in the world, be a successful company? The reason was we thought about the problem at a very deep level. When I joined the company many years later, I'd heard about the company when I was a CIO, so I was aware of them. And the reason that they were making traction is because they thought about how they were able to take flash technology, which traditionally was in the consumer tools like the iPhone, and how they were able to move it into the data center. They were also not the first company to put flash in the data center, but we provided a great architecture in terms of being able to do it, and we provided a great customer experience. Customer experience was a major problem in the storage industry. We found that this was a major gap, and we thought if we build a great product and we build a great customer experience, we'll be able to go to the next level. Zoom was in an even more competitive industry. More competitors, well-funded, WebEx, GoToMeeting, Microsoft Teams, Google Hangouts, and then some. Why was Zoom successful? Because it built the right architecture for where companies were going to be. Conference room, mobile, desktop, right? Understood that, understood a great customer experience, phenomenal culture that Eric Yuan was able to build, humility, great brand, all of the things that sort of went into that. So I refuse to accept that people be like, well, I'm this founder and it's in Pakistan, it's not going to work, etc. Like, if you are a founder, you have to do what it takes to be able to bring your company up into the next level. It's very easy for me to say as an investor, but that's why I spend time talking to founders, being able to give guidance, be specific about the actions that sort of come into place. So to follow up to the original question, you have to keep a line of communication open with that investor until they say no. Sometimes they'll say no first off. That's fine. You find the next one, right? An easy follow-up with an investor, which I get asked all the time, is who are the right investors I should speak to? I was in touch with a couple of founders the other day from Pakistan. I said, look, this is too early for us. Here are the couple of investors you should reach out to. I knew one of them, I didn't know the other. Totally fine. But you have to basically broaden out the net. the only way a founder comes to an end of a journey is to know they've done everything possible to basically build that company, period. You have to refuse to be able to do that in the hardest of times. I say this on multiple Pak launch forums in the past, is persistence happens to be part of the Pakistani DNA, which is, and just being able to have a degree of resilience to be able to basically go through that. And I think it's kind of important. I think a lot of people just forget that. So if I can do something to remind people of that, then I'm happily doing that right now. I'm happy to go 15, 20 minutes over if you are okay with that, Ahmed. If you're not, I'm happy
Absolutely.
to.
No, I appreciate the generous offer, and we do have a lot of questions. I'm trying to get through as many.
Yeah, that's fine.
And
no
we're
problem.
trying to keep them as relevant for the audience as possible. So some of them are about specific companies. So my apologies. We kind of
that's fine. Let's do it. The better, basically.
Right. All right, sounds good. So specifically about teams now, how would you effectively scale an engineering team? And naturally, the next question is something similar about sales operation, building a sales operation function. But let's start with scaling the engineering team.
Okay, scaling engineering team, very specific. So you've got to basically think about the closeness that an engineering function needs to have with product. And the reason for that is, my belief anyway, is that the closer partnership between product and engineering, the better your go-to-market is going to be, and the better product you're going to base build. That's just my philosophy. There's a guy called Elon Musk who also follows that. I think he's great. I think he's been wildly successful. Second is, people make this assumption about scaling with the assumption they need to hire more and more people. I think that's not correct in this day and age. I think there's more automation in the engineering stack than before. I think there is more. Microsoft GitHub Copilot is a 100 million revenue business right now, and it's just getting started. Okay, so without disrespecting the engineering audience in this group, the reality is you can do a lot more with less, right? Second is being able to have rigor in a process for releases, very specifically. You've got to do it fast and furious, no question. But I would strongly advise making sure that there is some degree of rigor in that. If you want to scale, which is what the question is about, like if you have to create a process later on, that's going to be problematic. Just get disciplined about how you do that, right? And being able to stress test that process is very, very important. Third is, honestly, be clear about the roles that people are doing and what they can grow into. There's always going to be a bunch of people who can do a lot more. You're not giving them the opportunity to do so. So being able to do that is going to be absolutely critical. So those are things, at least on the engineering side. On sales operations, I've mentioned that also. I'm happy to go into a little bit more detail. I think there was a question about inbound, outbound. Can I just do that question?
Sure. Yeah, absolutely.
Yeah. So given the product market fit was proven great team and past product experience, inbounds from great marketing, outbound from email webinars and branding and brand ambassadors. So I guess in this is in health tech B2B says, look, in general, B2B, the fundamentals are still the same. You need to educate the market. You'll get that by having customer testimonials more and more. So being able to do that will generate more, in my viewpoint, probably more inbound, because like-minded buyers are reading what other like-minded buyers are doing. And they're wanting to copy them or be able to say, okay, that's a safe bet. That company is basically doing that. The outbound motion has to be disciplined. You can't just go out and spray and pray. I actually think at this stage, you should be more targeted than you should be otherwise. So if you're looking for a specific buyer in B2B, the biggest advice I would give is you've got to have more coverage in an account. And what that basically means is if you're any enterprise you're selling into, whether it's B2B health tech, whether it's fintech or otherwise, if you're selling into a business, the more people that come to a decision and be supportive of it, the better it is. Most people make this mistake. I'll go to the CEO because that's what we want to do in Pakistan, get to that person right at the top and get them to be able to order right down the line. I guarantee you that is not a long-term strategy. And here's why. Because the CEO is not administering the system. and getting time with them to be able to, there will be blockers in between or otherwise. My advice is being able to educate a wider team to be able to do that helps tremendously. Brand ambassadors, honestly, it's hit and miss. It depends on the space. It depends who the ambassador is. It depends very, very much. What in B2B software works very well is people who are constantly out there educating the market. The model for enterprise technology is typically field CTOs or field CIOs or field executives or field CISOs in security. They're going out there, they're being former operators, and they're basically speaking to the equivalent peer group, and they're being able to say, okay, here's what we should be doing. Here's why I basically decided to join the company. Here's why I believe in the product, et cetera, et cetera. So that's what I would basically do.
Awesome. And so there's another one, your advice to someone who just started a career in VC.
Just started a career in VC. It's for the long term. You got to enjoy it. Honestly, this sounds, maybe it's just me. I just don't think you should do it if you don't enjoy talking to founders. I did not go into VC for the money. To be this notion that, oh, the VC, you make all this money, like, you don't. You only do it if the companies are successful. Like, otherwise, it's a bare bones. It's a nice salary. I'm not denying that, but the reality is there is no big payout. The feedback loop in venture is several years, right? You invest in a company. Think about it. You invest in a company, it's not going to go public in less than 10 years. Very few do. Pure Storage was the fastest growing systems company on record. Okay, those investors did well, but most do not. DocuSign went public after 17 years, which is standard. Smartsheet went public after 14 years, right? Like, it takes a decade plus. And only then when the investors invested. Braze went public after, 13, 14 years as well. So these things take time. If you're in venture, you've got to really enjoy talking to founders. And I think it's the best job for me. I mean, I've never been more happier in a professional environment. And the second piece I would basically say is be very focused in specific spaces. If you build up domain expertise, I think people will be successful.
That's awesome. And on the flip side, I also want to talk about if somebody's just starting out, maybe they don't get to work with LPs or work on that side of things. But since you just raised another fund successfully, what about that side of the LP side, which often, as a founder, we don't get to hear a lot about that. VCs have their own kind of shop to run in a certain way. I'd love to hear your perspective on managing the LP side.
Managing the LP side, not to go too much into it, but look, the reason I have empathy for founders doing fundraising, because I do fundraising myself. So every few years, a VC fund needs to raise money and raise a new fund. There's a bunch of funds that will have had challenging times doing that. We weren't lucky because we've worked at it for 15 years. I joined, I was advising the firm before I joined, but because this was Fund 5, we had to expand the fund and grow it. It just takes a lot of effort. So, on average, you can talk to an investor up to 50 times before they decide to invest, right? But managing the LP base, that starts to become standard motion. Once they're invested, I think you've got to manage the relationship for your next fundraise. You've got to be able to provide timely updates. You've got to continue to be excited about what you're building. And you've got to, just like founders do, founders don't have to be vulnerable as much, but they do have to be honest and straight up. And we think that being very clear about discipline of our strategy, focused of our strategy, the founding team being collective together, I think that's been important in being able to manage successful LP relationships. And I think ultimately when LPs invest in a fund, they're investing in a strategy and a team. So, that's what we're able to do.
Makes sense. No, there's a couple of questions I think you've already gone a little bit deeper into. So I'll skip that. One interesting thing we haven't talked as much about is will we see a massive resetting of valuations? I believe we already are, but maybe the question is how long is this going to go on?
You have to remember, put this in context. Look at the valuation numbers for 2020 and 2021, and that was far and above what it was in 2019, 2018. we're back to normal. And I think this is better, to be honest with you. I don't think it's fair for companies to grow into valuation. That makes it, that's a bit of a challenge, right? So, I think you have to be, in the bigger scheme of things, remember that companies are built over the longer term, right? So valuation is a data point. It's not the entire strategy, right? That's not a strategy. Like, I have a high valuation. You have to have revenue. You got to pay your bills. You got to pay your employees. You got to hire. You got to grow, right? Valuation is a part of that of the company story. It's not the entire story. And I think that's kind of important to be able to point out. At this moment in time, I think valuations are, look, for the seed state, I'm not gonna deny it. It's good. But when you look at the data, it's kind of back to where it was in 2018, 2019, which is, to be honest, probably at somewhere down the right level. So yeah, I don't expect a massive bump up. There was a questions about the different sectors. Just because you have an AI domain doesn't make you an AI company, right? So yes, there's a lot of mind share around AI, and yes, everyone's looking to invest in an AI company. But as I'd mentioned, you can probably build a good product. You may be able to build a good company. I'm not sure that all of those will be great investable companies. That's the difference.
And specifically while we're on that subject, what kind of AI startups, like real, not something.ai, I just started 2 days ago. What kinds of AI would you personally like to see exist, these AI startups, or even fund? The problem
Focus towards a core problem. Look, the problem is the price points on the core platforms around AI are still very early. You don't know, you haven't had enough cycles to know what your bill with OpenAI is going to be, right? Like, that's difficult to tell. If you're going to be a layer and a wrapper on top of OpenAI, I don't think that's a great long-term business. And the reason I believe that is because what they're building has been nothing short of exceptional. Look at a company like Jasper. I mean, I don't know what to say, right? Like, you can do so much more, and how you're able to basically do with a lot of the AI solutions, that it becomes really problematic, right? To basically build a competitive standout company. If you're building an AI product, make sure it's solving a problem that people care about, or you're able to demonstrate you are able to care about, that you're able to focus toward that business problem alone. This whole general, it's very difficult to support. Think about it, right? Like, you want to go after multiple departments, multiple use cases. You've got to build expertise at multiple layers deep in each of those to be able to support, and you've got to be kept up to date. It just sounds exhausting thinking about it. I'd rather have somebody says, all we do is do AI for sales operations. Boom. We know everything and anything we can about sales operations. We've studied 100 customers. We've built a stack around it. We know what the problems are. This is why it's a perfect use case for AI. And there are 10,000 companies that do it, and we're going to go after them. Great, right? I actually think that's a realizable use case. But here's the problem with AI. You have got to figure out how those models scale. You've got to think about the level of testing. This is uncharted territory. When you're looking at software and you're doing QA on that, you have got a fixed data set. You know the problems that are going to have versus a minor edge cases. In AI, maybe everything's an edge case. I don't know, right? So the rigorous level of testing that goes into that will be a big part of the pitch.
No, I think, again, this is very valuable for everybody who's listening in, mostly founders, to get into the head of a good investor on a very relevant, highly interesting topic that has a lot of implications for the future. So I'd say, again, rewind, play. That's just me. So getting to the last few questions here. Something interesting here is, like, how do you select a mentor? There's too many in Pakistan always available to give advice.
Oh God, yeah. That's a very good question. Actually, here's some advice for you, how you select a mentor. Ask them the most difficult questions up front. And second, figure out how responsive they are. And number three, tell them you won't offer them anything. Okay. Like ultimately, honestly, I know I understand the spirit of why this question is asked, because there are advice you can give for free. Like it's great. People unsolicited, people will give that. And I've received that many in my career. And the ones who actually want to figure out basically helping you, the ones who can provide more than advice are the best people to be with. I'll be honest with you, right? So I think that's it's a very human question. You've sometimes got to go with your gut. Don't have too many of them. You'll get this. Like I said, I've said this, and I'm going to be very open about this. It's an opinion I have. You can ignore everything I've said. That's totally fine by me, right? But you've asked a question, I've given the advice, and that's totally fine. The other thing is, don't have a mentor or a coach or an advisor where you don't listen to the advice. They've got to listen as much as you've got to listen, right? So there has to be, otherwise it doesn't really work in the long term. I have had one mantra, which is you have to work with people you genuinely like and would like to basically work with. Don't do it because of the name. It doesn't work in the longer term. There's no personal equity in relationship in that. Life is very short. So work with the people who are rooting for you and who want to be able to do
that. A great advice about getting advice. Maybe the last or second last, how important is it for an investor to have entrepreneurial experience? And then it's a statement, Pakistani VCs are startups themselves.
Pakistani VCs are startups themselves, 100% agree. Shout out to my friends, of which no shortage, of course, Misbah and Kulsoom, right. Raheel, Faisal Aftab, Ali Khwaja, and I hope, Fatma Gobi team, basically, like there's no shortage of, they're all great. I will be honest. I've met all of them and I think they're fantastic. The reality is a lot of VCs themselves are early in the journey. That's part of any industry, right? Just, they don't need to have entrepreneurial experience. That's not the job of an investor. Can they relate to it? Sure, that's fine. But I actually think that because they're entrepreneurs, they understand the challenges. They probably have more empathy in what business building takes than anything else. So I think being more aligned with them is kind of important. Do they have work to do? Fundraising, Pakistan being a difficult market to invest in. I totally understand that. Don't anyone who think I'm like sitting here in Bay Area, I'm like, oh yeah, you should just do all these things. Like in the greater context, it's very hard to be able to build a company in Pakistan. But the good news is, alhamdulillah, we've got a good ecosystem, at least of VCs, who are doing their best to be able to channel investment in companies. We're trying to basically, the regulations, SVP or otherwise, could do a much better job in my viewpoint. I think that will happen over time. I think the infrastructure for startups needs to be done a lot better. I think the financial, I think a lot of the financial banks should be having definitively a much better program for startups. I honestly believe there should be, an SVB type model for startups in Pakistan. I mean, entrepreneurship in the DNA of the Pakistani race and has been for many, many years. We've been able to having to figure out challenges that most generations do not. My father went through that. My grandfather went through that. My uncles and my aunties went through that. My own mother had to be an entrepreneur. So to answer the question more directly, you've got to be able to, I've tried to equip you with the points that come in with most VCs when they look about investing in companies. It will help you to be able to have your conversations with investors with that context. be able to provide them with the information they need to make it easier for them to get comfortable investing. And if you don't have that, then you've got to get that. That's the job, right? So I don't think VCs have to be founders. I'm not brave enough to be a founder. Like, I'll admit it, right? I think it's not for everyone. It's hard. Like, I've worked in corporations. I've worked at an early stage as an early stage startup, as an early stage employee, when it was less than 20 or 30 people. I've done that. And I know the founder's journey is really, really hard. And I get that. It's not for everyone. That's why, number of startups fail. But that's okay. And the reason it's okay is eventually what happens is you get correction in the system about what's working, what isn't, what the market needs. And the right company comes along to be able to basically build that out. Look, Uber should have taken over the world, but Kareem didn't. Kareem had a different idea, right? So there've been no shortage of those examples, and I'm proud to say that this is why the journey is long and hard, and you've got to be able to basically go after it from that vantage point. So, be respectful of people's experiences and see who the best partners are to work with you. It doesn't matter what their background is, Spacey.
I don't know, with that, I think we'll wrap it up. Thank you again, Yousuf. And again, I'm sure PakLaunch and Ali will share this. We're already getting some amazing feedback. And I encourage everybody, for the people who weren't there for their benefit, we really, kind of put this out there, share it. If you found this helpful, try and send it to a friend or two who might benefit from a lot of the very wise words here. Again, it's very applicable, I believe, despite Pakistani market may be very different. A lot of what Yousuf, you talked about was purely on a lot of fundamentals and very strong fundamentals. So we thank you again for your time and generously kind of staying a little bit longer as well. Again, you can reach out to Yousuf on LinkedIn. Generously offered that.
But one thing I'd say is, look, I'd love to meet as many people as possible, but time, of course, brings problem. If you've got a question, send me a LinkedIn request, send me an email. I'm happy to basically answer that stuff. So you don't have to I need to meet with you for 30 minutes. Of course, I would love to be able to meet, but my schedule gets backed up. But reach out on LinkedIn. Feel free to ask questions directly on email or otherwise. And I'm happy to sort of connect and look at pitch decks and be able to respond accordingly. So thanks for making the time. Ali, thanks. You've created a phenomenal community and a forum to do that. Ahmed, congrats on your recent success. Looking forward to reconnecting with you in future on your next journey. Maybe this is maybe something will come of this. So
thank you, appreciate that.
Okay. All right. Thanks everyone. All the best.
Take care.
Bye.